Namaskar. My name is Brijesh and I'm run Auxano Capital.
Yes, tell me about becoming an entrepreneur. What was the journey to that?
Okay, fine. So I did not want to go to the grave not doing what I wanted to do. So I didn't want to have a regret. So that was the only reason why I wanted. I said, "Okay, let's take this path."
And why
And
wealth management?
to again the process of elimination, like where I believe I can add maximum value and I will enjoy what I want to enjoy. So, like professor start comes to work. So every single day, every single moment, I'm enjoying. It's not look like a work, but it's like you're playing the playground. We love sports and we're a sportsman. So when you just move that, and here you are making a difference in people's life, your life, and as you are working or as you're doing, you're also having fun. So
So
that's it.
you were a financial controller in an American company. तो वहां से what like tell me the journey like वो क्या स्टार्ट किया आपने कैसे स्टार्ट किया फर्स्ट फ्यू सेट ऑफ कस्टमर्स कैसे आए
ओ दैट्स इंटरेस्टिंग जो मैं कर रहा था जो मैं कर रहा हूँ मतलब करने को किया उसमें कोई संबंध नहीं that was
राइट
totally corporate and this was
हाँ
totally different. So
राइट
when I started out, I did not even know the difference between, say, mid cap, multi cap, small cap, ultra short term, liquid, कुछ नहीं लेकिन इतना पता था कि since as in my student days and as a became professional, I had gone through numbers. So numbers were something which was part of me, and that's how and then okay, let's see what requires capital, what don't require capital. So wanted to do something wherein you don't need then that capital because then you have to either bootstrap or raise. And at that time when I was, raising capital was much difficult or different, I would say, as compared to today. So and I liked this. By the process of elimination, I found out. So as I said, I wanted someone to manage my personal wealth way back in 2003, and the only solution I was getting was insurance and insurance and insurance. I'm not saying insurance is bad, insurance is required, but that is not the only solution to create wealth and grow wealth. So I checked with my seniors, and that this was a problem statement. So I said, you find someone who can speak the language and someone who understands the corporate world can work out. And then did my homework. And that's how it started. So the first 6 months I had zero clients. And I had my expenses to go. So I had taken an 18-month like cold planning. I did, okay, पहले 18 month में का पूरा खर्चा. I live the same lifestyle which I was doing a corporate life, and it did not allow anything in my family to get affected in any form or any manner. Yeah, so you need to have that mental strength. And again, I did not call any of my friends or family saying that, hey folks, this is something which I'm started out. No, why don't you allocate it to me? Now I would say, why should I allocate it to you? Because you are a greenhorn. You don't have an experience. You're a corporate guy. So why should I give it to you? Fair. But some of them actually, so said, "Okay, fine, let's start." But having said that, the whole journey has been, unknown folks or folks who I got in touch in the later part of my life who started out fresh first, and the other, there were few who, said, okay, let's start. There are few who were doing what it did, but said, Kia, since you're coming, let's start with you because, I believe in not run away. So a combination of all factors. So what is important as you start is you believe in yourself. Every single day you give your best. And at some point of time, luck, serendipity, hard work all come together and we start.
Mm. So your way of earning was you were essentially like doing mutual fund investments for your clients, and you would earn a percentage of the amount they invested, maybe like a 1% or something like that, 1 or 2%.
Nice. So so okay, when I decided to become one, so the rules changed. And as I quit the job and I started in, the rules changed more. So it was like I said, wow. And then 2008 happened. So I said, fine, now everybody has buttons, even slate. So you can show your difference and USP. So you took that, brought in a new thought process, share the USP, uh, and made investing easier and simpler for the investors to understand. So we have something called a 3 bucket strategy, which is so simple that anyone can do it. Now, since anyone can do it, the human mind is it's structured towards complex things. We said, here I have a 3 bucket strategy. The first bucket is anything for 0 to 3 years, you will not invest in equity or anything which can lose capital. But in 3 to 5 years, put in more conservative instruments, and 7 plus you can put in very aggressive kind of instrument. So that gives clarity. This gives clarity to anyone who can do that. So our clients or investors today don't tell us what to do. They only say, no, this is this, put in the first thing. But that becomes easier. So we moved away from product being the solution to time being the solution. So we didn't change anything. We only, prompt engineering बोलते हैं आज की तारीख में ये LLM और AI में.
Right.
और जैसे prompt change किया है, then it was just this is it, and that has helped the journey also. So any chances of miscommunication or gap in understanding gets eliminated by this approach, and this is so elementary that anyone can do, and we want everyone to know that. And having said that, we believe that India today has a lot more potential for financial instruments to come in and move forward, because typically most of the investments were either in real estate or in fixed deposits. So these investors can still continue. At the same point of time, some allocation can come into financial instruments, and this can grow. So you can still follow this method.
And you said the rules say, how were you earning them? Like, was it by charging advisory fees?
So no, it was always the distribution. India में advisory fees कम देते हैं, ना के बराबर है. So that is one reason where one area where one has the ecosystem needs to come into play. See, early stage, if you recollect, not till about I think 2007-8, you had an upfront commission. So that means if you sell a product, well, then you get an upfront of 2% or 1%, depending upon what. That means a lakh, you get upfront 2,000, and then you get a trail, which can come upfront, say 1% or much more than that. Now, what happened was that upfront became zero. You're getting a point. So first amount again became zero. So that changes your cash flow. So as I said, I say cash flow is important, and suddenly the cash flow becomes, whatever you to make the business plan, it is zero, and you cannot recover it any form, any manner, because that's all the revenue is coming.
This
Then
called entry load, na? I think जो upfront का होता था.
exactly. This is called entry load. So,
Okay.
so moment I became one, the entry load became zero. I said, wow. I said, now it is more even Stevens. So I look at threat as an opportunity. So how do you convert a threat into opportunity, and make that opportunity as a strength? So that helped, So you have to respond to the ecosystem. You can't change is only constant, and that's how we have evolved. Respect change, adapt to change, and evolve. And at the same point of time, your basics remains the same, but how you are able to evolve, adapt, and respond is the key.
So the business was essentially structured as a distributor, and it has stayed that way.
Absolutely.
It has stayed that way.
See, if you say technically it has stayed that way, but on a more larger level, we can say they are like a multi-family offices, because we don't sell, we have customer solutions from that perspective. So technically, yes, you are right, but only in a more I would say, application manner, we are much smoother.
Yeah, what I was wondering is that why you didn't decide to go and become a portfolio manager, that PMS route.
No, so that's where AI's come into play over a period of time. See, the thing is that, you have to adapt and adopt, and know when to get in. So if you get in early, then also you face challenge. You get in late, then also you face a challenge. So not that you want to get the timing right, but you also have to see that, how is the, financial region of the, economy coming. So I like the animal kingdom a lot. So if you look at animal kingdom, the ratio of wild dogs is the highest, 85%. So, so if they want to hunt for prey, 85% of the time, in their bang on as compared to any other animals. So, animal kingdom, the world of biology has a lot of learnings. And can you use that and adopt that in your personal life? Why not? So, it is free out there. That was the only thing, which came into play.
Okay. And like by so first 6 months you said that you were not able to raise any capital. Then how did that grow? Like year on year, how much was your capital that you were managing?
So, let me put it this way, forget the capital amount. Let me put it this way, key. When you say the first 6 months, my AUM was very low or next to nothing, it did not mean that I was not doing anything. I was actually meeting, talking, sharing,
Yep.
pasting,
Yep.
posting. No, and that time there was no Insta or Facebook or anything of that sort, right? So you're doing, and then plus you're also understanding the nuances, learning the final points, finding yourselves, all of that, So a lot of hard work, was being done preparing yourself. Like someone said, no, Usain Bolt ran only for less than 2 minutes, but for running that 2 minutes, the hard work which it did. Similarly, we also did a lot of hard work. And then finally, folks said, I mean, this guy is not going for a dog. Looks like he's serious about what he wants to do. That's how it happened. So let's say uh, uh, by the end of year two or year three, I was earning what I was in my corporate life, and then slowly, it grew. And from a one man army or lone wolves, we have a team today who takes care of and
And
manages the clients across.
how much do you manage today for the wealth management business?
Yeah,
Or
it's let me put it in a 3 digit million. So that's how we see numbers are
uh,
vanity. So,
in
but
crores, like three-digit crore, you're saying, or what is
much more than that. So,
four-digit
so
crore?
what has been kind closer to that. So, what has been kind.
Wow,
So,
amazing, amazing. Okay.
no, but we still feel we are still. See, in terms of AUM, it's a vanity game, but also indication of of the trust people place. Other part is that we choose to work with whom share the similar mentality and will not chase for the sake of chasing. So, as I
But
said,
it's not a vanity game. No, your take home amount is dependent on your
no,
AUM,
no,
right?
but see, and at the end of the day, I have to enjoy working with it.
Ah, okay.
I have to. I know when your phone call comes, I should have a smile, not a frown.
Mm.
So, that's how we look at, So
So,
chasing, if you're chased AEM, we are on a different level, but
mm,
we choose to work with whom we want to choose to.
mm. Uh, what I want to learn from you is how did you acquire these clients? Because a lot of very intelligent people become wealth managers, but to reach this kind of scale which you have of almost 1,000 crores is exceptional. How did you
Nah.
acquire
So let
your
me, it is not, today, see, today is much easier or much harder depending on how it, see, you just do the job, that like I said, for 6 months, hardly work already clients. And the word of mouth and reference is huge and big. So I should definitely, yeah,
okay?
you know, get my early uh, investors or families who trusted me, and then they put in a word in their circle, and then they put in the word of circle, and that's how we are grown. It's purely by mostly by word of mouth, which mostly a word of mouth is what. And then once the team came, we also did other activities, but has been mostly through references and word, and that is and we hugely believe in.
तभी word of mouth जाएगा.
See, returns is not the only factor, So,
Okay.
in the wealth management space, you have to get comfortable. You have to trust. Trust is the currency. Returns is part of it. Returns is not the only thing. So let's say we never said anyone that we promise you X returns. If anyone said, okay, but I am getting this, can you get me more? I think that's the wrong statement you have, because one will never be satisfied with the return, because there'll always be someone who can outsmart, outscore the return part. So we said, ki, what is your need and how can we ensure that, on the cash flow part, whenever you want, however you want, you will get that. And you should be comfortable what is what. So that's where the three bucket strategy which you talked about come into play. And that is the guiding factor. So that's how that's a good.
Okay. 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 Essentially, like balancing the risk and return for your clients based on their appetite. That is the secret too.
See, many a times you have to ask the right questions.
Hmm.
So today in ChatGPT or on the LLMs, you have to prompt engineering. It's basically you know that. So it is like, since I've been able to work in corporates, large multinationals, so how you connect the dots and how you connect the dots, and then you ask the right questions and don't push things. One common thing which all our clients or families would say that we never push things. And so many a times they also say that why don't you push? So it is both ways, right? So we never push clients, or sir, March ho gaya, please give me nothing of that sort. Every recommendation or act, it's purely based on the need, and based on that only that's where you know we have had stable growth per se.
Okay, got it, got it, got it. So, let's talk about Oxano now. Uh, As a wealth manager, you were essentially investing in public market, right? Like listed businesses.
Yeah, yeah.
What made you want to go towards the private market or like venture funding or private equity or like all the different ways in which basically, so Oxano is like in private wealth, private investing space, unlisted space of investing. What made you want to diversify there?
See, if you recollect, Flipkart was very acquired by Walmart. Then lot of local in movie and other the world was coming in. So a lot of action was happening. So some of our well-funded clients said, "Okay, for him to track this, track this." So we tracked, share. Then they said, "Okay, let's invest." So I said, "Invest," and said, "No, why don't you invest?" Then that's how I said, "Okay, wow," because since we're doing a lot of legwork and we also have then let's start. That's how the whole it's an extension of like as an asset allocator, right? We sell three bucket strategy. So this would come in the third bucket. So let's do. So this was like, very clear to the investors too that liquidity will be less. If anything happens, if the divestments happen early, then it carries combination of lugs and pretty and right now right place. So keep that in mind and move forward. And that's how we started out, and that's how the journey has been.
Okay. And you started Oxano as an AIF, alternate investment fund.
No, so that happened 19, but before that we did two SPVs, and then now as we have got two AIFs, an angel and a category two. That's how.
Just help me understand these structures. What is SPV? What is Angel? What is category two? Like, for an outsider who wants to understand how these things are structured or what are the regulatory norms here.
So AIF is like alternative investment fund, and there are what categories as in category one angel, category two, category three. Now, typically what happens is if typically it has a foreign investor who puts money in an AIF. The minimum which you can invest or a commitment is like 25 lakhs, which is in category one angel. So here you have net worth of 2 crores, uh, and this is besides your home and others which will have an experience in the space. Uh, and then the investment cannot happen in a company which is more than 10 years or in a company which is, grows. So basically, early stage investments, which is what comes in, yeah, search what more would check. Then you get a category one, which says your minimum commitment amount is a crore and you have no choice of which. It's like a blind pool, whereas in category one angel, you can decide whether you want more bucks based on the opportunities being shared. In a category two is like much wider. Similar is like commitment is a crore minimum, but there can be various types. It can be debt. It can be CCPLs. It can be combination of CCPS and listed public markets.
What is the CCPL?
So they're not. This is like compulsory convertible preference shares, the typical instrument
Okay.
which comes into place. So that can be there, and so that gives that flexibility. Then you got a category three, which typically it's only invest in public markets. So it can be one step ahead of mutual funds, where mutual funds has got various categories, and the fund manager has to follow what is then the category as prescribed by SEBI. Whereas in category AIF, you have a choice and you can go through or invest the way that the fund mandate is there in place. So that's where it comes into play. So I'll give you an example, like when the app was started in 2012, in December of 2012, what the investment commitment amount was less than 3 lakhs in growth. Today we have more than 5 lakh crores. It's crazy, Eh, typically, category two contributes to 85% of this. But it's, it's very good way regulated of capital coming in. See, one more thing is that regulation has upped its ante over that if we look at the last 5 years. In fact, every quarter, every month, SEBI is getting into the regulation piece and with much better for the investors. I think India is the most regulated market. It's many coming through all conventional space.
Okay. Category three, I guess, is what like a portfolio manager, a PMS company would have a category three license.
See, anyone can have it, but like the PMS is like in PMS, it started out as little as 10 lakhs and then moved to 25 lakhs and now it's 50 lakhs. Whereas in EIF, it is like a crore. Like,
So PMS is a completely different license.
it's a different, enable different license.
Okay. Got it. ठीक, okay. So you said for the first 2-3 years it was SPVs. So SPV means each time you invest in a startup, you create a LLP or something, some sort of
You're bang on.
okay. And that LLP pools the money and goes as a single entry in the cap table. So which companies did you invest in those 2-3 years?
So we put
Early.
money when beyond we put in plan book. No. We will get a lot about these going forward. So this one really rich early
Okay.
investments. It worked out.
And the early stage, like pre-seed, seed.
So let me put this there. We always had a thesis in the sense that, we put money in running enterprises. So, yeah. So never at the addiction stage or not at the pre-revenue stage, or always post-revenue. So post-revenue typically means that there is already someone the cap table. So close seed is where
Okay, got it. Okay. And why this thesis?
because we think we understand this thesis only. The other part is that the investors were coming in, they were new age investors. They were very conservative. They wanted to participate, but they also said losing capital, is not something you're comfortable with. Fine, they know you have a long gestation period, you're okay with it. But losing capital is something which they were not comfortable with. So that's so. And again, in our case also, so if you want to lose capital, then what will you want to? So that's how the whole.
Okay. And 2019, you created the angel fund.
Yeah, 2019 we create the engine.
Okay. How much is the AUM for that angel fund?
So we increase the fund size. So it's the last close is still to that in play. So it's a 25 million fund, and I think we can still take a few millions. We still have 6-8 months fund flows it.
Okay. Okay. And angel fund means that the LPs here can choose which investments they want to participate in.
They have an option.
Right. Right. Okay. Okay. Got it. Got it. And then you did the category 2 fund. When was that?
Yeah, that was in 22.
Okay. And what is
Because
the size?
we said, that's an option where you can invest in growth opportunities and also in strategic or pre-IPO opportunities. So we said, can we do that? So that's a 15 million fund which we have it.
And how much is closed in that?
We still have 50% for growth.
Okay. 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 Got it. Got it. Okay. Uh, how have you evolved as a private market investor? You've been doing public market investing for the decade prior to this, and then you got into private market investing. So, what has been your learning in private market investing? What works? How to decide which startup to back, and because the data is a lot less when you do public market investing. There is so much data, your balance sheet and financial statements for many years, and so on and so forth, which you can analyze and then decide. But how do you invest in private market?
Okay, so we said, can we look at emerging mega trends? And then can we look at whether it's a category creator or market owner? And then we sit to understand with the promoters and the team, the entity, what value difference, and see, when and where exit can happen. So it's not very easy. So many times, and pivots will happen, ecosystem will change at all, and how the team, how the promoters respond to that come to play. So a lot of things is not in our hands. So let's say you don't like it, we can't exit because there is no liquidity. So you say, exit event will happen, but then it will happen whenever it will happen. So it's like the Joe Harvey window, unknown, unseen. I'm sorry. But but having said that, if the entity is disrupting and doing something, that is where you want to come into play, and that is where it is. So I believe every investment I'm still learning. I'll not say that. See, be it public markets or private markets, we don't give much credit to luck, or we don't give much credit to cut loss in equity. All of this comes into play. So you should be operating, in knowing what you want to do and following the elimination process, and then you move forward. So that is the right answer. So, like, the one thing which we did was in 20, when there was highest of football, there we did not money at all. We actually sat silent for nearly 9 to 10 months. So you will say that as a AIF, you're obligated to invest. You're right. But I'm not obligated to invest at any price. I carry a fiduciary responsibility. So that's very important. So from that aspect, we did, and then once we found that things are right. So let's look at one thing. When Zomato started operation, there are similarly 2, 3 companies were still there, similar way, but only Zomato came Zomato, as they are. So similarly, so we said, okay, fine, let's follow the octopus approach. So when you have investments in fintech, you have an enterprise, you have in consumer products, having an octopus approach helps.
What is
So
an octopus approach?
see, if you see octopus has multiple heads. So
Multiple
let's say
limbs.
multiple limbs, right? Not multiple heads, sorry, multiple limbs. So, but it is, and the core, it is an octopus. So we said, okay, fine. If you identify, say, a fintech, so can we look at investing in different parts of the limb so that it will get connected? So you are not putting all money in same thing. We are putting money in the entire body. So if you look at the body, like Akshay is a person, but Akshay has a head, she has eye, Akshay has nose, So can we do that? It can be good, it can be right, it can be wrong, but at the time of investing, you have a more key, which enable you're heading into. But if you know why you are entering, that becomes very important, and how exits can happen, could happen, and you're willing to wait for 5, 7 years. And also willing for getting pivoted, going through the ECG graph, ride the journey. So when you get an exit, you will not enjoy it, but you'll enjoy the journey more. So when you get exit and you're all out of it, then it's like history. So how you continue to be present, that journey is, and most important part is when I tell our investors also, like, when the exit happens, as in when the exit happens, also a time the exit happens, your IRR should be much more than what the public markets, would have delivered at least 400 basis points. So time तो लगेगा, लेकिन अगर आपका IRR उससे ज़्यादा होगा, because that would be the premium I am paying for loss of liquidity. So be it.
Okay. So the difference between public investing and private investing is public investing has liquidity. You can sell and get your money back whenever you want to. But in private investing, you have to wait for an exit event. So therefore, the premium for liquidity loss is needed.
No, in private also, you know, even data.
Okay. Right. You don't have
Governance, data,
Yes.
governance,
high
you
risk.
know,
Yeah. Right.
it's next level. So, that is never a dull day in private markets. Some, portfolio companies must be doing fantastically well. Some will be doing fantastically not so great. Some will be doing okay. And then, so you have exhilaration, agony, all of that, because let's say the first half hour I'm having a great call. The next half hour, I may not have a great call, but that is how the day is. So you need to have your emotional push in the right place.
What are some of the investments, the major investments that you have done?
So let me talk sectors, because, then if I take names, then that will be like, say this is my favorite child. But having said that, everything is in play. See, we, certain sectors, as in like today, what is like quick commerce and e-commerce, we started that much earlier. That we talked about fintech. Fintech is doing huge and big. So we have after those post there. We're talking about deep tech also, we like that space. Geospatial is also there. So are you saying you're all over? I'd say no. Like our training, which I got when I was doing Majai Technology, we worked in various sectors and industries, right from thing like tides to a hospital, to laminates, to print, So that gives you an insight into the workings of a thing. So the basic remains the same. The only thing is that how you are able to understand the industry and you apply that. So that's the approach. We have own playbook, which we have for analytics or associate or principal, or even we have got other. And so when you have processes in play, it becomes much easier to run operations and run businesses. So we are not the earliest hopes. So like in a fund, we had a compliance officer right from day zero, whereas it only became mandatory, by SEBI only about 15 months back. Talked about, governance and process in play, we had right from day zero, and we were told, no one asked the question, somebody would ask you. I said, this is my money and you know to give. If they're not willing to give, then let's not move forward. So, and we, did face backlash, this is not done, but I'm not taking to pay. I said, money is money, and let's have an handshake and move forward. Today, some of the companies, in the portfolio folk, the promoters do tell great, thanks for it, because as you have had in the next. So, so can we, so as we see, right, as we can imagine things, can we have the clients as that? I have had a corporate experience looking at rocks temperature. So I leverage that. Some of my team members have an entrepreneurial experience, leverage that. Some of my folks are actually in the intelligence space, I leverage that. We have today, what in very senior global leaders, you talk about team, so they can talk about M&A, you talk about strategy, you talk about distribution. So those can also, get into play. So we are not a typical VC. We are more like, while we own a part of the business, whatever small it is, we don't interfere in business, but same part of data and numbers are important. And if you know the data and numbers, what you have, then you'll also plan better. Surprises will come less. Negative surprises will come less.
Okay. How do you source deals? Like in terms of, because the best deals are like there's a lot of competition for the best deals. So
Best deals are never in the horizon.
huh.
Best deals get closed before it becomes a deal. You get to know
Yes.
the deal is closed.
Yes. Absolutely.
So today it's like, people know us, people know sectors, promoters. When it comes that, will come inbound. Many, some of the, iBankers share, keep their hair, keep hair. Many times, if we find something good, we ourselves, get in touch. So it's like all of it, The others would come in like, someone who's working in the corporate wants to start out, and we believe in that person and say, okay, fine, let's form a group and invest. So you name it and think about it, and it comes into play. So we look at the horizon first, right? And then if we like someone, in fact, the very first investment which we did right on day zero was something that it was operating in our society, and we said, great, let's go and check. And that was the first deal we did. That was in bonds. And then we said to the folks, yeah, this is what we're doing. So then they were thinking too much, or hey, this has never happened. How? Yeah. I said, boss, we are doing it. What was the ticket size? We go ahead. And we did it, On hindsight, everyone says, oh, that was a great one. But when you're actually doing it, not many wanted to be part of it. But then when they saw that, then the next issue did was million plus. In 2017, we did £1 million. Single ticket.
Which company was this?
I'll let it put it. This is in the mobility space. Let me not use the name. It was a mobility space, and it had a lot of challenges, and it was the promoter's resilience which made the period can go through. And recently we raised more than 15 million.
Wow.
Year and a half back, So we took some part exits. We still continue to be a decent size shareholder, and we see that. So that's what I said. In the life of investment, if we are able to generate more than what the benchmark generates, that is important. So you have to go through that ECG graph.
What's your advice to founders when it comes to raising funds from Auxano? Like, how do you evaluate and that whether this is an investment you will do or not? And, therefore, what is your advice to them? How should they reach out? What stage should they be at? Whatever else you look at.
Ticking. So is it an emerging mega trend? Is it going to be a category creator or a market creator or market wire? Then, what is the skin in the game? So are you looking at selling it off, or you wanted to create a new legacy? And most importantly, there's a wavelength, the both of us should enjoy the journey. बाकी यार पैसा बनेगा नहीं बनेगा क्या ग्रोथ होगा वो सब तो बेजरूरत दिखते ही नहीं है. Someone can become 0 to 100 and back to 0. Or someone can come 0 to 100 or to 2000 and upwards and onwards much better. So get the basics right, be willing to,
What are the basics? When you're saying get the basics right, what are the basics?
यही मैं बोला कि आप जैसा हमने बोला जैसे मैगजीन का ट्रेंड है कि कैटेगरी क्रिएटर है या फिर कैटेगरी ओनर है या फिर मार्केट क्रिएटर बनेगा. Very sort of basics मतलब you're not, so let's say you have intercourse with 9 women does not mean that you make a child in one. No, that is certain way the things can happen. Right? Respect the law of the land. Respect the animal kingdom. Respect the laws of the biology, which is which is there in play. If you're, like today, if you're buying growth, then you need to have an endless line of capital to continue that. Then you remain the last man standing. If you don't have that kind of capital in play, then, look at a USP which is there in play. So, in a red ocean, it should be a blue ocean, or you can create a blue ocean. So having said that, you should, that's how the whole thing is. That like when like one of the parameters which we say is that for earning 1 rupee, how much you're spending. So if if you're earning a rupee and you're spending $100, no, we're not in that business. We don't want to be in that business. Now you may have a valuation, but is the valuation realizable? Like someone says, let's say if a VC says, what 5 unicorns in a portfolio. Now, fine, is it realizable? If it is not, then it's paper. Let's be realistic. So that is how. So today, DPI is the new mic. So
What is, so hold on, yeah, DPI is the new mic.
mic. So see, mic is multiples of invested capital, and DPI is a distribution of investments, distribution per investment.
Okay.
So when you say, okay, what does that mean in simple terms? How 100 become 300, that means your mic is 3x.
Okay.
When you say distribution, DPI is like, out of what you have become 100, how much you have paid back? If you have paid back, out of 100 rupees, which you have paid back 300, then your DPI is 3 times. So DPI is what is realized, whereas MOIC is what your valuation shows multiples. So today, people say, "Yeah, batao tumne kitna, what is the exit?" So that's why DPI is a new MOIC, I say. So simple, कितना पैसा वापस मिला, वापस देने की capacity क्षमता दिखाया VC ने, तो फिर, so that is the burn, that is the heartbreak for the heartburn. Today, okay, I'll say, like you will never find us in the media saying that we raised X amount by amount. Okay? Many times we say, our portfolio has raised undisclosed amount. So we are told, at least tell the amount, you will get more PR. So we are not for PR. We want the dhanda, the business to talk about itself and be their own. Yeah. Is it possible? Why not? If you do the business, great. So we would love when our investors make. We would love, that is the sign. So over the next 2-3 quarters, we'll be trying towards that, how we can get that so that it can come into play. So this is the basic framework. But if you say what is advice, it's simple, being elementary. Good business, good thought process, respecting the numbers and economics, not buying growth, looking at having a forward vision. So when I say forward vision, means I'm not talking about fire vision. Because I myself, say that give me, then we are looking at invest, we say, give me 2-year data. Plus or minus 10% is great. But if you give me 5-year data, that is Excel extrapolated. You don't know what can happen in the next 18 months. So, and there's a vision, very clear, you can give next 18, 20 months, 24 months. And then how you go to that path, you manage something which we revisited or pivot, and be afraid. And if you say something, but again, not to put good money after bad money. Something cannot work, or if something has to be revisited. So one of the earliest investments which we did, the easy happened. The promoters were upfront in saying this will not work. We have to go this path. Investors, influence market investors accepted because they run the show. They know much more, having the the years background. But if the promoters had not shared that, instead of today we are sitting on phenomenal returns, they're unrealized, the company would have been, would have mortality. So how do you do that? So that is very important. And ask help, seek help, very important. And having been coachable, today you believe this is the only way to do things. I say no. I'm still learning every single day. Like today, an 18-year-old kid can use ChatGPT 4 much better than any of the 30s or 40-year-olds. And when they are going to enter the job market or become entrepreneur 4 or 5 years, you need to go at least at their level or slightly higher, else, you will be as a dinosaur. So you need to be very clear, like as a cockroach, the animal can eat on, is low upon. But I say cockroach has stages. Right from the time even dinosaurs were there, dinosaurs had gone away, but cockroaches have continued. So, you can be a bead or you can be bamboo, but depending upon the position, situation, should be either of it. So that is where I would always say adapt, adopt, respond, and change is the only constant. I've changed over my entrepreneurial journey, we are adopting things. And that is the only approach which can, you are all will be the same and should be the same, but how you're able to adopt and respond and move. That is the only way you will stay the game, remain relevant and grow.
Okay, amazing. Thank you so much for your time, Brijesh. It was a real pleasure.
No, thanks, Chair, for having me. Thanks for this free, meeting conversation which we had, and I give you all the best for this. What you're doing is great. Yeah, getting ideas out there, and cheers to that.
Thank you so much.
Cheers.